Riley-Zelda Manufacturing Company organized in June and recorded the following transactions during its first month of operations. And we're going to record these 4 transactions. They purchased materials costing $800,000. They used direct materials in production costing $485,000. They applied direct labor cost of $500,000 to various jobs. Now, because they say jobs, we know this is a job order costing environment. And then they applied manufacturing overhead at a rate of $10 per direct labor hour. And they tell us the direct labor workers earn $20 an hour. All right, so let's go through these entries. First, they purchased materials costing $800,000. Well, we're going to increase an inventory account. Materials inventory could also be called stores inventory, raw materials, all of those would work. The important point is that it is an inventory account, so it's an asset on the balance sheet. And they didn't tell us if we paid cash or we purchased this on credit. So we're going to assume that it was purchased on credit, which means our vendors gave us legal title to the goods at some point, let's say today, and we agree to pay for that in the future. So when that happens, we will use accounts payable as the credit amount. That's a liability on the balance sheet. All right, the second transaction. We used material in production costing $485,000. So this is being used directly in production. So we are going to increase work in process inventory with a debit by $485,000. Now, if in a job costing world, we would need to know what job it would get assigned to. Okay, that's just something to keep in mind. And then the offset would be to the materials inventory. So in other words, we're simply moving it from one inventory account to another. Work in process inventory, again, is an asset on the balance sheet of a manufacturing company. Okay, then entry 3 says we applied direct labor cost of $500,000 to various jobs. Now, keep in mind that besides making this entry, there would be some indication of what jobs they were applied to. You know, did $100,000 go to job 101 and $50,000 to 102? We don't know, but at this point we know in the general ledger, work in process will be increased by the $500,000, and we're going to credit direct labor, right? We're going to credit essentially the obligation account to pay workers. Okay, now we go into the fourth entry, which says applied manufacturing overhead at a rate of $10 per direct labor hour, and the direct labor workers earn $20 per hour. Now, I'm going to show you the answer, but you might be confused how we got that answer, so let me show you the logic. What you have to do is you have to say, well, they gave us the $500,000 that was applied to production in the entry before, right? And they told us that the average or actual rate earned was $20. I think they just said it's actual. So if we divide the $500,000 by $20, let me slide up so it's not on the bottom of your screen here, we can then calculate that there was 25 hours worked. Now I'm going to slide back up because they told us that the manufacturing overhead rate is applied at $10 per direct labor hours. Well, now that we know the hours, we can jot in the application rate, which is $10 given to us, and we can calculate that the manufacturing overhead was $250,000. Okay, so that's how we come up with the $250,000 entry, which is a debit or an increase to work in process inventory, and then a credit to the manufacturing overhead account. Now, one thing to keep in mind, manufacturing overhead, the account itself won't appear on a financial statement. I think of it as a suspense account. It's just a temporary holding location that shows how much, in this case, how much was applied. In other entries, you will debit manufacturing overhead, and in practice, you'll actually use a number of different accounts, maybe one for indirect materials, maybe one for outside services, you know, one for utilities, maybe you break the utilities down, whatever the company decides it needs. But total manufacturing overhead won't appear on a financial statement. But right before the accounting right before the accounting period is completed and you're preparing financial statements, you'll have to clear out that overhead. You'll have to figure out how to dispose of it. Okay? And typically, the disposition of manufacturing overhead, if it's small and immaterial, will go to cost of goods sold. If it's material, we may have to allocate that amount between work in process, cost of goods, and cost of goods sold. Okay? I have other videos that shows the disposition of manufacturing overhead. Hope you found this helpful.